Hey everyone, this is Michael Bengiat. This is the Stock Picks Weekend Video Review for July 9th, 2022. We're going to go ahead and just review the current market environment, go through the stocks on our watch and ready list, and then we have a couple of stocks that we've purchased for our portfolios this week. So let's go ahead and get started. Here's our disclaimer. Go ahead, please pause the video and read this so you understand what we're presenting here. So first off, we're still under the stock environment of yellow. So the best strategy is swing trading. We're in a bear market. We're not in a bull market at this point. I'd say if you're be prudent just to take shorter term profits and trying to hold on for big profits. We're still at about expected stock exposure, 10%, 15% max. We're starting to see some stocks work, and a lot of things are just not setting up. Most recently, we're starting to see healthcare and biotech stocks. They're outperforming. I think we have 6 stocks in total out of almost all of our stocks are healthcare stocks. And we're trying to find some biotechs that are set up with some proper buy points. But a lot of them are just trading in kind of sloppy patterns and nothing that's really low risk way to get into them. So we're just watching them. And overall, it's still a risky environment, and the overall market trend is under pressure. So we're just got to just sit on your hands. We don't need to be trading every day. The idea is to make money. In this environment, it's really easy to lose a lot of money. So we have to be very disciplined with our capital and just look for the best setups. And I know it's frustrating. We're 6 months into this year, and we've been allotted last year not doing a lot because of basically the bear market in the Nasdaq that was killing most of the stocks we normally buy in the Nasdaq, the growth stocks. So it's been a very tricky environment, but this is what happens after huge bubbles, and it takes a while to work out. But I can guarantee you that when this is all over, there's going to be absolutely fantastic buying opportunities with a lot of money to be made really quickly. So we just have to keep that in mind, keep your powder dry for the most part, and we just wait for that time, and it will come, just like it has after every other bear market. So let's go ahead and just get straight to the stocks, and we'll start with our our growth portfolio. So let me switch over to. There's our charts. So let's start with, we just bought McKesson Friday, and excuse me. So you can see this is a medical wholesale drug supplier. They actually do a lot of different things: specialty care, healthcare products, medical supplies, equipment. So they're a big company. They're 47 billion, a lot of shares, good size float and everything. So it's made a nice run throughout the end of the year. And then, of course, generally after you get a big run like this, nice and smooth sailing, we've gone into a consolidation. It's just a second stage base, so we're still pretty good. We're not like it's fourth or fifth or sixth or something like that. That is kind of, maybe the run is over. And we have just bought it, breaking out this little consolidation inside the base. The only thing is it was a good spot to buy, and it should hold. But of course, it is running into some overhead supply here. So if I just draw the line here, you can see, and not a lot though, so you can see it's just about trying to break above here, which is really, we want to see if we can clear this area, because that's where there's been sellers lurking. But it's only been 1, 2, maybe 3 days of stocks try to get above there, but it's been pushed down by sellers. So overall, it looks pretty good. Great RS line. We have 98 out of 99, so it's basically outperforming almost all stocks. Very strong RS line going up. The weekly looks good. It's you can see here. You can see the institutions have been stepping up for this one for a while. Hasn't even closed below its 10-week moving average. Of course, we had a little bit more correction because of what's going on in the market. It found support at its 20-week, and now it's starting to come back up. We have the RS blue dot. Another great sign, and earnings are not for 25 days, so it gives us some time. And as you know, probably stocks tend to run up into earnings. Not quite sure why that's happened, why that does that, but It's just what it is. Overall, here, look at the monthly chart. It's been a pretty good, had a long period here for about 6 years where it just kind of didn't do a lot. Kind of came down, wasn't a big decline, and now we're starting to go off threes. So overall, it's a strong company, good sales. You can see here, solid sales, solid earnings for a big cap. Excuse me. And one thing we do like too is you can see that earnings have really accelerated in the last this year, starting this year and going forward. So we've almost doubled from 2016. You can see we had $12, 12, 12, 13, 14, 17, and then suddenly 23. So this company seems to be firing on all cylinders. Looks really good. So that's why we bought it, and we'll hope that it continues to do well. Let's go to Humana. This is in our long-term outperformer portfolio. So let's go to the monthly first. So you can see we like this kind of a chart. It's just having a nice long uptrend, not a lot of volatility, though occasionally like you see here, which was the coronavirus crash. We've it really got a little volatile, but it came right back. Over here, you can see we had a nice long run for 3 years, but we got above the upper trend line. That's a sell signal that we sometimes point out. I can just real quickly draw the line. Yeah, we got a little too enthusiastic, so that was a sell signal there. If you had been in it, of course, it came back down, and just has been kind of making its way up. So, in fact, here's another little sell signal trick. It was going up, making new highs, but look at the volume. It's getting lower and lower and lower. So that's another warning sign in a stock like this. But we actually have it's been taken forever, but a whole selling rules and strategies video course is going to be coming out, and it goes into a lot of these things in detail. So I'll let you know more about that when it comes out. It should be really good. So let's go to the daily for Humana. Again, medical managed care. It's industry group 10 out of 197, so that's great. Shows you that it's one of the most strongest sectors. Excuse me. Great, again, strong RS line going up at a nice angle. 95 out of 99, very strong. Now this one, you can see too, we can let me draw that line again. Actually, I'll just use this line. It's already drawn for me. So thank you. Thank you, Marcus Smith. So you can see this stock, whenever it was getting around to 472, around 469, it was running into the sellers. And you can see somewhere over here too, it looks like it's probably around the same time. It would come down. Looks like they had some bad news here. It wasn't earnings, because earnings were here. Something happened. Earnings came out, very strong earnings, up 154%, came back up. So it's been getting sellers kind of lurking here. And so, but you can see that we had a big move down, so then we kind of tightened up. This move is it's smaller than this one, than this one. This one's even smaller, and then we came up and we were just floating right around at this buy point. And so we finally broke out. So you can see what this means is that we got back up to this level and there were no sellers. So that's what we're always looking for, is that we're getting up to new highs or a spot on the chart that's really giving us a buy pivot area, and yet you're not seeing a lot of volatility. We want to see less volatility on where we're buying it. So you can see more here, excuse me, less here, less here, less here, and then off it went. So I'm going to have to make this a little bit quicker. Whoops. I'm losing my voice. So I'm going to just kind of quickly go through the ones on our ready list. So we're going to go to, the first one on our ready list is McKesson, which we just talked about. Next one is Cigna. Excuse me very much. Hold on a second. All right, I'm back. Sorry about all the coughing. Same thing. This is the same industry group. It's looking pretty good. It's in the buy zone. It's already made a little bit of a move, but we're still within range. Our buy zone goes from 271.75 to 285, so we're right in the middle. So it is buyable. Earnings are still a ways away. That's a good sign. So it looks pretty good here. The next one's Humana, which we just talked about. And the last one is Centene. Again, same medical managed care. And this one is just broken out on Friday out of a sort of a double bottom base. But you can say the same thing. We had a big move, kind of went down a little bit more, and then we tightened up here right at the spot where a lot of sellers were. This one maybe is a little bit weaker. Excuse me again. Let me see if I can draw this. Oops. If I can draw this line here. Yeah, so this one is getting right into that area where we've had some sellers lurking, but that was back in April. But they still could be kind of floating out there. So we'll see how this acts. It would be even maybe a nicer breakout if it kind of just came down a little back here and even formed an even tighter area and then broke out. Okay, so for the long-term outperformer ready list, we have Humana on there also, if you want to talk about that. And the other one is Excel Service. Ticker is EXLS, not KS. Excuse me again. So this one is broken out and it's just above its buy zone, but it's been a little volatile here. So we're just kind of watching it. It's a little bit on the thin side too, but pretty good overall earnings and sales. It's got a composite rating of 98, really good. Again, kind of a breakout year is coming. It's spent a lot of time about $2 in annual earnings, and now we're suddenly up to $5 and $6. So something's going on good here. Excuse me, one more time. Okay, sorry. Boy, this is getting me here. So that's when it's on the ready list, but it's a little volatile, so we're kind of staying away from that one. Let's move on to our final stocks. This is one called Stride. It's been on our list before, but unfortunately we bought it, and I think we bought it over here, broke out, and then we had the big plunge the next day. Sometimes, some stocks, this is the character. So we sort of be careful with these. It's just like this one will gap up. Here we had a gap up and then a big down day. So we're being careful about this. Again, this one too, it's a little volatile here, so it is on our watch list. I don't like the volatility. We want to see it kind of calm down, but for quite a few months now, it's been quite a volatile stock. But it keeps coming up on our leaders lists in terms of RS and relative strength and everything else, so we always keep watching it. Let's look at a weekly. Yeah, you can see it's kind of a violent history here. Here we had a great move up and then an equally violent move down. But you can see it is tightening up overall. And sometimes, when these stocks are kind of, let's see how long this has been out for. Oh, 2008. It's been out for a while. But sometimes you'll see this. They come out. Nobody knows how to price a stock. It's all over the place. And then, in fact, that's another time. But eBay is one that I know. Investors Business Daily, the founder William O'Neill, he watched that one for a long time, and it was just kind of up and down. And then finally, it started slowly tightening up, and then he bought it, and that was at the beginning of the big move. So sometimes, and then that's what happens. It's just nobody knows how to price it, and then eventually they figure it out. It calms down, and then the good earnings and sales come in, and the stock takes off. Okay, so this one we're watching next was United Health. This one's a little bit weaker. You can see it's still kind of forming a cup with handle. The handle's a little bit low. We'd like to see the handle a little bit closer up to the old highs. It doesn't have to be at the old highs, but maybe starting up here. So really, I would look at this as part of the right side coming out. So it's a little bit of an early buy. And of course, when you do these little early buys, you got to watch out for this overhead resistance on the left side. So a little bit of potential selling that could come in here. But also one of the things we start to see is that a lot of stocks you look for these themes. Sometimes a lot of stocks are breaking out of these lower buy zones, and sometimes they just don't work. And other times, the breakouts work really well, and sometimes breakouts all fail, and you're better off buying inside at lower spots in the base. So it's something we're always looking for. But this is one that's on our watch list. Not really quite, even though it broke out, but you can see it kind of, let me see if we get rid of that line. It tried to get out, but it came in and closed just below that. So again, a little bit of sellers are appearing here. So we'll continue to watch that one. And the last one is AstraZeneca, another AZN ticker. And same kind of thing. It's formed a double bottom, and we're trying to get it 67.55. Yeah, just above this. So it would be when it pops into this zone. But we do like this. Look, here's again, you can see this big move, 71 to 60, came up. Kind of did some tight trading there, which was nice, but whatever happened, sellers came in. I think the whole market was gapping down like this. But it quickly came back up. And so we have a move here. You can see, just look at the size, a little bit smaller. And if I drew another line here, you're getting even the smaller one. And sometimes if you really look, you'll get a little tiny one here. And that's giving you the best buy spot on low volume. So that's really it. That's it for this week. So I'm going to slide off before I lose my voice completely. And we'll be back next week. Okay, thanks.